Hello, everyone. Welcome to the NDPERS Pre-Retirement Education Program. Today, we're going to go over the NDPERS retirement insurance options. Our agenda today will cover the NDPERS insurance options. Insurance coverage is often what keeps us working longer. Maybe a person has met their rule for retirement, but that insurance piece is what keeps them working. Any of our retirees in any of our 9 retirement plans. Also, there's retirees in the teacher's retirement plan or in the TIAA higher ed plans. They can come on our insurances when you leave employment and begin to draw your NDPERS benefit. Anyone that begins to draw a pension is going to be offered our dental and vision insurance. For active employees that were enrolled in our Voya life insurances, there will also be some options to continue that. Surviving spouses receiving an ongoing retirement benefit may be eligible to continue that insurance, or also those who are newly enrolled in NDPERS insurances, depending if a retiree has passed away. Again, this is the same with surviving spouses that are not receiving an ongoing retirement benefit. There's also going to be some insurance options. This again is going to exclude the life insurance. So when you become a retiree, you need to note there is no open enrollment in retirement. As active employees, we're really used to those periods each year where we have those opportunities to enroll or disenroll in different insurances. This is not the case in retirement. You are eligible to enroll in the insurances if you apply within 31 days from the date of any of the mentioned qualified events on this list. Coverage will come effective the first day of the month following the date of the qualifying event. If you and your spouse do not elect coverage during a qualifying event, you may forfeit your right to enroll in the plan at a future date. Here are some examples. Your date of retirement. That's defined as either your last day of active employment, provided you are not deferring your retirement or you're not taking a lump sum refund of your entire retirement account, or the date of your first retirement check, if you are deferring your retirement. This also would be for those non-NDPERS retirement plans I mentioned, TIAA or the TFFR, the Teacher's Retirement Plan. Again, we would just ask for verification that you're in one of these retirement plans. Another qualifying event is going to be if the retiree or their spouse is turning age 65 or become eligible for Medicare, or if you have loss of coverage in an employer-sponsored plan. This could be that perhaps you had coverage under your spouse's record. They're terminating their employment, retiring, whatever the case may be, and there's going to be a loss of coverage. Also, qualifying events, marriage, birth, adoption, or legal guardianship. Now, let's discuss those health insurance options at retirement. Many times people may meet their rule of 85 or 90, whatever the case might be, but you're not Medicare age or eligible yet. Here's some options. You might consider COBRA. COBRA is the federal law that provides many workers with the right to continue coverage in a group health plan. If you're currently on the NDPERS insurance plan, this is the same plan that you had as an active employee, but you are paying the premium. This means it is the same copays, same coinsurances. You also have the option to split your contract. This may be the case if just you and your spouse are needing the coverage. For some cost savings, you can take 2 single plans rather than a family plan. That's what we mean by split the contract. Again, same insurance that you have today, you pay the premium. Some people maybe your spouse is still working, so you're going to hop on to the spouse's insurance plan. Or another option is people go to the federal marketplace. So what happens after COBRA? Let's say you took COBRA insurance and then that terminates after 18 months and you are still not Medicare age or eligible. You might consider going through the federal exchange, as mentioned above, the marketplace insurance, that's healthcare.gov. Please note, NDPERS does not assist in any way with marketplace insurance. If you or an eligible dependent are Medicare eligible, then let's talk about the NDPERS retiree health insurance options. One health insurance option is called One Medicare Plus Other Plan. You may also hear us refer this as the One Medicare, One Non-Medicare plan. What that means is there is someone in that household that is Medicare age or eligible. So one Medicare means the member or an eligible dependent, for example, a spouse, are Medicare eligible. So they have come on Medicare Parts A and B. Then they need to pick up a Medicare supplement and drug plan. The Medicare supplement and drug plan through NDPERS is called the Dakota Retiree Plan. The others in this plan will be the person or persons not in the household that are not yet Medicare eligible. They then can come on what we call the Dakota plan. This is the same health insurance most active state of North Dakota employees and some of our political subdivisions have through NDPERS. These rates are reviewed at the beginning of each calendar year for the Part D, which is going to be that drug plan for that Medicare person, and then every 2 years for the health plan. Currently, the rate is approximately $940 per month. Again, this is the rate for the Medicare eligible person's supplement and drug plan, and the non-Medicare person or persons in that household, that's going to be their health insurance plan, one big bundled package. We'll break this down a little bit more. Again, those others in the plan is going to be that non-Medicare eligible person. They're going to come on that Dakota plan. Again, the same insurance that most state employees and some of our political subdivisions have through Sanford Health Plan. This will be the same deductibles, same co-insurance amount, same out-of-pocket maximums. For example, an NDPERS member is retiring, and this person is Medicare age. They will go on the Dakota Retiree Plan for their Medicare supplement and drug plan. And the non-Medicare person will come onto the Dakota plan. This may be the case if your spouse is younger and not Medicare eligible yet, or possibly you still have a dependent child or two in the household that still needs coverage. This would be the other or others in the plan. Some of the benefits of this plan, along on that previous screen, the $250 wellness is going to include preventative screening services of up to $200 per covered individual per year. For these services, the deductible is waived. Once that maximum $200 is reached, any preventative services would be subject to the cost share based upon the plan. And as you can see, some of those might include a routine physical exam, the routine diagnostic screenings, and routine screening procedures for cancer. This, again, the Dakota plan prescriptions, this is how this would work. Again, keep in mind, this is going to be the person or persons in the household that is not Medicare age or eligible. So as far as medication is going to go, there's going to be 3 levels of coverage based upon the medication and which tier or group it falls under. The tier level is going to be determined by the Sanford Health Plan. As you can see, in the first box under formulary generic, the out-of-pocket expense would be $7.50 copay and 12% coinsurance amounts. A formulary brand name medication is going to have the out-of-pocket cost of $25 copay and 25% coinsurance. For generic or brand name medications, there is a $1,200 coinsurance maximum per covered individual per calendar year. Non-formulary medications have the highest out-of-pocket cost with $30 copay and 50% coinsurance amounts, and those medications do not apply towards that co-insurance maximum. There's also going to be some mail order options available for the NDPERS members as well. Please contact the Sanford Health Plan if you needed additional information on this. For more detailed information, I encourage you to visit our YouTube page as we have some great insurance shorts that further describe these plans and some of the benefits offered within them. So let's go back to the one Medicare, okay? The person that's going to be Medicare age or eligible, or persons, maybe there's a couple people in the household. Once you are Medicare eligible, Medicare is the primary insurance, so they are driving the bus. Medicare will pay first, then the supplemental insurance kicks in. We bundle our supplement plan with the drug plan, and that is through Humana. Typically, if you're in the US and you're getting services through that Medicare covers, and you go to a facility that accepts Medicare, between Medicare and your NDPERS Medicare supplement plan, you will have no out-of-pocket expenses. Now, you will always have something that you have to pay with any sort of drug plan. But let's look on about how the Medicare and the Dakota Retiree Plan work together. So you're on Medicare. You pick up parts A and B. This becomes your primary health insurance. You sign up for these with Social Security Administration. And again, this is your primary health insurance now. Now, generally speaking, Medicare is going to pay 80% of the cost. That is why people are going to pick up a Medicare supplement plan, right? 20% can be a hefty price tag. So the NDPERS plan is the Dakota Retiree Plan through Sanford Health Plan. They're going to pay second. You cannot be enrolled in a secondary insurance if you don't have the primary insurance, right? What that primary insurance is going to be? Medicare, Parts A and Part B. So you go to the doctor, you give them your Medicare card, then you show them your Sanford Health Plan card that's your supplemental plan. Lastly, your Humana card, and this is what you'll use to fill your prescriptions. Okay, step one, Medicare pays first. Step two, Sanford pays second. After Medicare, you cannot be enrolled in the secondary insurance if you don't have the primary. Third, you need medications. You take your Humana card to your pharmacy, pick up your drugs. The Dakota Retiree Plan, again, is going to be that supplement, and ours is through the Sanford Health Plan. Again, typically, if service is covered by Medicare and you're at a facility that accepts Medicare, your out-of-pocket cost with this plan would be zero, because with this plan, there's no copays and there is no deductibles. And we'll share this presentation. You can click on the link if you needed some more information about the Medicare supplemental coverage. Often members call NDPERS asking specifics about the plan and what is covered. The Sanford agents are the ones that know more about this. Therefore, please contact Sanford for those questions. Okay, again, the Dakota Retiree Plan, we mentioned our supplement plan is bundled together. It's the supplement and the drug plan, okay? Part D, D for drugs. That's an easy way to remember this. Again, you're always going to have some out-of-pocket expenses based on which level of drug plan that you're on. We're going to go into that in a little bit more detail. But these prescriptions and the tiers of them, they change by the pharmacy benefits manager with guidance from the FDA and the DEA. Again, we have a link that we post each year where you can get further information on the specifics of medications that you might be taking. So there's 4 tiers of drugs, and they are based on this list. Example, as you can see, there's a bunch of different tiers depending if it's generic, preferred, non-preferred, or specialty. I'm just going to kind of give the example if you want to look at the specialty tier. You have a tier for a drug, and let's say your medication is $100. You'll pay $25 and then 50% of the remaining cost share. Now, keep in mind, this plan is only until the end of December 2025, and our website will be updated with new information for 2026. Please note, this is what you pay until your total out-of-pocket drug costs reach $2,000. Once you reach this amount, you will enter the catastrophic stage. And again, you can see 30-day supplies versus 90-day supplies. There's options for standard retail therapy or mail order. The plan name is Humana Group Medicare PDP plan. If you needed to reach out to Humana for specifics, again, you would want to contact them directly as they're the plan administrators. And we also have a lot of information on our website. But this is very important when people are shopping around for those Medicare supplement and drug plans, especially if you're on specific medications. You might want to check that out. Again, ours is a take it or leave it plan. Ours is bundled. This is the only plan we offer. And so if you have specific medications, that's why people might want to dig a little bit deeper into coverage for themselves based on their very unique situations. Okay, moving on to discuss dental plan for retirees. This is the same plan that active employees with NDPERS have, and this is through Delta Dental. We offer all new retirees the opportunity to come on this plan, whether you had our insurance, our dental insurance, or not. You're going to have the opportunity at retirement to come on, or again, if you had one of those qualifying events that we mentioned before. So you can see the rates here. Employee, but this is also for the retired member, okay? So you can use employee or retired member. On that chart, it would be $42.24 a month. If it's just you and your spouse, $81.50, just you and a child or children, $94.62, or a full family plan. It will be a $50 deductible per person per year, and that does not apply to the diagnostic or preventative services. Those will be covered at 100%. Basic services, endodontics, periodontics, oral surgery, prosthetic repairs and adjustments, 80%. Major restorative prosthetics or orthodontics, 50%. There is a calendar year plan max of $1,000 per person and a lifetime orthodontic max of $1,500 per person or covered dependent. Again, there's going to be no waiting period for this. Okay, for example, you terminate your employment in September. You're going to be an October retiree with NDPERS. You're going to get your first pension check from us in November. Your dental insurance coverage will begin November 1st with that first pension payment, should you choose to take this insurance, okay? But again, there'll be no waiting period. Once you're eligible to come on as a retiree, it's going to start right away. There's no age limit for that orthodontic treatment. There is out-of-pocket savings if your dentist is within network. And you can visit deltadentalmn.org for additional services or information to see is your provider in network. Oftentimes, it's very easy to call your dental office and ask them. Same with the group vision insurance. You're also going to have the opportunity as a retiree to come on this insurance plan. It's superior vision, and to the side here, again, you can see the monthly premiums. You can sub in the word employee for member or retired member because same exact cost. Again, if you have it as an active employee, you have your insurance through us, this is going to be the same. If you're maybe a political subdivision, you weren't offered this insurance because your employer doesn't have ours. Again, as an NDPERS retiree, you're going to have this opportunity to come on. So as you can see, what it's going to cover, exams, frames, contact lens fittings, eyeglass lenses, contact lenses, those are going to be one per calendar year. And again, in network versus out of network, we'll talk about that a little bit on the next slide, but eye exam copay, $0, an in-network allowance of $100, contacts, lens fitting, there's going to be a $35 copay, and then in-network allowance of $100. So kind of talking about that in-network versus out-of-network reimbursement, same thing. Oftentimes it's very helpful to contact your provider and see if they take this insurance. Now, of course, we can always change these insurance plans when we come up for bid on these. And just because we change the insurance, let's say, for example, your vision carrier, they don't take this insurance. you'd be reimbursed the out of network costs. More than likely, you're going to have to pay that bill and then just request reimbursement. But if we change the carrier, then maybe they, would. Now that is not going to be a qualifying event for you to come on our plan. So just kind of something to keep in mind. But again, that is through Superior Vision. And again, we have more information on our YouTube page with insurance shorts, more specifically on the Delta Dental insurance, and also for that vision insurance through Superior. Next, let's talk about the retiree health insurance credit. This is a benefit paid by your employer on your behalf. It is a monthly lifetime benefit once you begin your pension. We contract out with a third party called ASI Flex to administer this benefit. Again, here is a plug for our YouTube page, but it is going to explain how to claim that healthcare credit. A lot of good detailed information. We're kind of just doing a quick overview today. Please note, not all retirees are eligible for the RHIC. It is dependent on what your date of hire was or when you came onto the NDPERS retirement plan. For anyone enrolled after January 1st of 2020, the RHIC is not part of their retirement plan. All right, some RHIC keywords, okay? RHIC, Retiree Health Insurance Credit. That's what that stands for. It's going to be a reimbursement for any after-tax premiums, okay? Not expenses. Different than if you did a flexible spending account through ASI Flex. Those would be like medical expenses, right? This is only for premiums. So very important, you pay that premium, then it's reimbursed by ASI Flex. Some of the eligible after-tax premiums are health insurance premium, vision plan premiums, dental plan premiums, and long-term care premiums. Please note, RHIC will not be reimbursed on subsidized insurance premiums, meaning you go out to the federal marketplace and you find your own insurance plan and you're getting a federal subsidy to reduce that premium. IRS says you can't double dip and do both of those things. So this is how it works. Let's say you took the NDPERS insurances. For example, you and your spouse came on that one Medicare plus other plan, right? What's going to happen is you're going to tell us, how do you want to pay for that? Are you going to just have that premium come out of your pension check? You can have it direct debited out of a bank account. What happens is you've paid that premium. We can see you're paying that premium. We feed that information to ASI Flex. You're automatically reimbursed. You're just going to see it direct deposited about 3 to 8 business days after the first of the month, and you'll just see that direct deposited right into your bank account. Same bank account that you give us for your pension payments. Now, scenario number 2, you're not on the NDPERS insurances. You will need to submit a claim form that shows you're paying those after-tax health insurance premiums, and then you'll get your reimbursement. For example, the easiest way to do it is to claim it. If you're Medicare age or eligible, claim it for your Part B Medicare premium. That's about $185 a month. So let's say your healthcare credit was $150 a month. You would just complete a claim form. You submit a copy of the letter that you get each year from Social Security Administration, Social Security Administration, showing what you're paying for that Part B Medicare premium. That's your proof that you make that payment. You do that once a year, and then boom, you're done. So again, you're going to have to do that. Now, let's say you're not Medicare age or eligible. You just go find your own health insurance plan and you're paying for that. You're going to have to show, that you've paid that premium, monthly proof of payment, and then fill out the claim form. What's nice is ASI Flex, once you're retired with us, they're going to send you letters every so often, kind of reminding you, hey, you have this unclaimed money. So it's kind of hard to forget that you have this unclaimed money. But please note, under step 3 there, claim submitted after the deadline will be denied. The deadline is always March 31st to submit for the year prior. For example, 2025, you're going to have until March 31st of 2026 to submit it. After that date, that ship is sailed, and it's kind of a use or lose benefit. Retiree reimbursement questions should be directed to ASI Flex. So if you have any questions on the RHIC benefit, you can go directly to ASI Flex, but on the NDPERS website, if you do a simple search in our search box, you type in RHIC, that claim form will come up right on that as well. And you can print those each year. Again, for those people that are Medicare age or eligible, they don't have our insurances, the simplest way is every time you get that letter from Social Security Administration each year showing what your Part B Medicare premium is, remember that's your trigger to, hey, I should go ahead and submit that claim form. And then you're done for the year. All right, next let's talk about the life insurance options. This is only available to those retirees that participate in the life insurance plans as active employees. They're going to have the option to continue their basic employee, their supplemental employee, dependent supplemental, and their spouse supplemental life insurance coverage. You must make that election within the 31 days of the date of termination. And then upon turning age 65, retirees can only continue that basic life insurance coverage through NDPERS. This is going to be when you're beginning your pension, we're doing all the paperwork. We're going to go through this with you where you need to make that decision on what your life insurance. Now, that basic level of coverage, it's going to reduce from $12,000 to $1,500. That would be the payout upon death. And this is, again, for retirees. That premium for the basic life insurance coverage is going to be $4.32 a month. So let me give this example. Let's say you're an active employee, have that basic coverage, and then you have an additional supplemental coverage on yourself of like $100,000. You can keep what you have, or you can reduce that level of coverage. So let's say you're 62 years old, you retire, you're going to keep your $100,000, but when you turn age 65, that all goes away. The only thing that we then offer is that $1,500 policy for that $4.32 a month. At retirement, you will have some options. If under age 65, again, you can keep the coverage that you have until you turn 65. And then once you're over age 65, we're going to offer that $1,500 basic policy, $4.32. Voya will also reach out directly by mail regarding your options to port those policies with them. Generally speaking, those prices are going to go up substantially in your premium price. That is all through Voya, and it's with them, and it's their rates. And you can also do that if you wanted to port those existing policy. You can do that up until the age 70. Again, there's options to convert that to whole life. Again, that's all through between you and Voya directly. If you need any information on life insurance or the rates, you can go to the NDPERS website, and there's a drop-down tab that will show you that. You can also reach out to Voya directly. I'm going to give one more pitch about our YouTube page. You can see in the top right corner of our website, there's a button where you can just kind of click on next to the search bar. That'll take you right to our YouTube page. You can also go right to our homepage and go to the Watch NDPERS videos of events and recordings. We really have a lot of great information for active employees, retirees, upcoming retirees that can assist you through this process. If you have further questions, please reach out to our member services team and they'll be able to assist you. If they are unable to assist you directly, they'll get you in contact with the correct team member here at NDPERS that can help you. You can also log on to your member self-service account to get in touch with us. You can run benefit estimates, you can request appointments, you can look at service purchase information. There's also a lot of great information on there. And in fact, on our YouTube page, we also have a video explaining all of the different things you can do in MSS.